All right, Mark here, and welcome to another Greenbridge Investing market analysis. Thanks for joining me. This is we're doing this as a stream here on YouTube as well. Now, I'm going to be going over Bitcoin, the major markets, and I got a particular stocks with situations I want to point out. If I can't get to all of your questions, I will follow up in the chat room, as you know. And I know we're going to start out with a few questions that I saw in the chat room. All right, so with that being said, let's get started. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, today is Wednesday. Now, I usually don't do these so frequently. I like to wait a day in between so the market gives us better information. But since I did yesterday's on a Tuesday, it's like, all right, I got to catch up. So, now here's a Wednesday. All right, anyway. So let's begin here with Bitcoin. Look at this situation going on here. Now, oh, by the way, feel free to ask questions as I go through this. I would like to keep this around 15 minutes if I can. But if I have a lot of questions, I will answer them, the best that I can. Now, nice squeeze, okay? I don't know if this is relative to the FOMC outcome. It could be, because the thing is, I don't really pay attention to the news. It means nothing to me. If you look at all the stuff that I've been writing, even in a previous video, if you look at my TradingView article that I wrote on Sunday, what's the title of that article? It's Let Your Winners Run. So I didn't need to know that, if the FOMC had an effect on this or not. I don't need to know why we got this nice vertical squeeze. None of that information means anything to me. All I knew at the time was we were not showing any signs of weakness and we were not generating any sell signals. Okay, and we never even came close to 64.25. That would have been a significant sell signal if it could do something like that. Never even thought about it. That's why I was confident the whole time. Now, do I know that we're going to get a vertical candle like this in one candle? No, I don't know that. That's random. But that's the market. It's been strong. Now, we had a question in the chat room from Michael. And let me know if you guys can hear me okay, real quick. But Michael asked in the chat room about the short interest because he was observing the short interest. Andrew talks about the short interest a lot with Bitcoin. And he said, hey, there was some strange activity with the short interest. He said that the short interest was actually going lower, right, going into this. And something about, I think it spiked only after and it didn't make sense is basically what he was saying. And here's the answer to that. First of all, short interest. Okay, great, Bella. Thanks for joining me. Short interest on Bitcoin is just one potential variable that can give us some valuable information. And it's not always it's not something that we can rely on completely to really make a decision. I mean, it's okay if it doesn't make sense. Now, also keep in mind, this may not be just shorts covering. This can be more new longs jumping in. It's very possible, right? Maybe the longs were waiting for something. Although this is typically what a short squeeze looks like, for sure. We don't know what's really going on, all right? So if the short interest, if you look at TradingView, right? I guess this is what they're looking at here. If I pop that up really quick, I'll show you the chart of that, the short interest chart. I have it here. Right, so this is the short interest chart, right? BTC USD shorts, and the shorts are actually increasing in this. I mean, that could be they're piling in, thinking maybe it's a fake out or something. I don't know, but that's a mistake for sure. I mean, if I would not. First of all, we don't short Bitcoin. You can see why. Secondly, Bitcoin is nothing but strong. So this could just be these ignorant Bitcoin bears piling in. But the point is, this information, it doesn't really, it's good background information, and it's hard to really make sometimes solid decisions or make complete sense out of something like that. So just, it is what it is. That's all. I know that's a long answer. You guys got to stop me when I speak so much. Anyway, so that's Bitcoin. Now look, Bitcoin's pushed, what was the high there? Pushed 89.70. Nice. It cleared that resistance zone between 7,300 and 8,000, just completely cleared it. That's why I took it off my chart. And now we blew through 85, right? I had this, the next resistance I was going to write in the chat room, 8,500, blew through that. Now the question is, how do we close? All right. If we close above that, that's great. If we even pull back a little bit and fool around, that's fine too, because this thing is not a short, not yet. Okay. And if it was a short, we wouldn't short it. We would just step aside. But now if we close here, the next resistance areas we're looking at in the 9Ks, right? Mid 9Ks up to 10K. That's the next resistance area. So as long as this thing is maintaining supports, and by the way, these levels, 64 and a quarter and 6,000, they're going to be adjusted. I have to adjust them now to this new high, and we're going to have new levels of key support. All right. So I just wanted to get this video out of the way before the market closes so I can address these questions. All right. Anyway, so that's Bitcoin. Nothing to do there, but let your winner run. All right. We have targets. Let it go to the targets. You know, we had 2 trades out. For those of you that have Bitfinex, that second trade is doing well. All right, I can show that. The reason why I say Bitfinex is because if you took that trade on Coinbase, then it technically got stopped out. But here are the targets, right? 8,000 and 84.25 were the targets of that trade. They're all taken out, right? You see that? So that's beautiful, right? That's an ideal type of trade. So if you happen to have Bitfinex for that, I don't know if anyone had that, but that was an aggressive trade that I called maybe a week or 2 ago on April 13th or April 14th, I believe we shared that idea. All right, anyway, so let me move on here. Let's get to the stock market. Now, the FOMC meeting, I don't know what the outcome is. I don't pay attention to news, as you know. Some people think that that's crazy, but I don't need news. I need price action. Now, the price, obviously, the market likes the outcome of the FOMC meeting. It doesn't matter to me what Chairman Powell said. All that matters to me is that the players that matter like it, and that's it. This is a breakout. This is a beautiful breakout, especially after yesterday's outside bar close. This was a concern, the red candle, because I talked about it here in the analysis. The pin bar, the outside bar, and I said if we take out the low, that could be a problem, all right? Never took out the low. Instead, we started out strong, I guess thanks to the earnings reports we had yesterday or whatever it was, right? Started the market out strong, and look at this solid candle. Again, we're going to close in about a half hour, and we're closing above this resistance inside of a resistance zone. That is strong. We had higher lows in place. There's just nothing to be bearish about here. Now, that's why buying those stocks in those breakouts, like we talked about, what was that one? Urban, right? That was a great breakout stock. I haven't checked the price yet. We'll take a look at it here real quick. But this is, it'll do well. Many breakout stocks are going to do well in this type of environment, especially some, stocks breaking out now because this thing has some room to run. Where can the NASDAQ go from here? Well, we're on our way to the next resistance, which is like the 9,700 area. It's hard to believe that, it can get up there. Now, here's the thing. When I say something like that, it doesn't mean it's going to go up there in a straight line. It'll take some time. It could take a few weeks. We may see some minor pullbacks and noise along the way and consolidations and this and that. And you're going to see the bears come out with all this bearish nonsense, which means nothing. All this negativity, right? All this stuff in the news that people have been saying, whoa, I don't know. I'm concerned that blah, 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 and this and that. The market doesn't care. The market doesn't care. Big green candle. People saying, oh, I don't think we're going to get the V bottom. I think we're going to get a square bottom. I think we're going to get a triangle bottom. V bottom, okay? Can't have opinions. It doesn't matter what anyone says or what anyone thinks. Only the market knows the reality, and that is what's being reflected here. Maybe this is a reflection of all the stimulus, the weak dollar, whatever. It doesn't matter. All that matters is price is telling us what it wants to do. It wants to go higher. So this is going to be good for breakout stocks. There's going to be perhaps some stocks, I'm going to show you some here, that may be good candidates to add a little to or something like that to see how long this plays out. Now, if we get some sort of broad sell signal along the way here, that could change things. But until that occurs, I have to be bullish. Okay? Okay. Oh, cool, Michael. Great. That's great. In one day, I was expecting that thing to take a few weeks to do that. But excellent. You took advantage. And you reduced your risk, and that's the key thing in something like this. And now you can let this thing ride in a more comfortable way as the market probes higher, which is what it's setting up to do here. Okay, so great job. All right, so that's the NASDAQ. Again, feel free to ask questions, everyone. Michael, did you hear my answer to your Bitcoin short interest? Did you hear that answer? because I went over that right at the beginning. You can actually play this thing back. You can go back to it if you didn't hear it. All right, so let's go to the DAX. All right. So now the DAX. I saw Andrew put some stuff about the DAX earlier. Look, the DAX is strong, but should we be surprised? I talked about the breakout, but what do I talk about with this thing all the time? I talk about that it's following the U.S. markets. The U.S. markets are not having a negative day today. Yesterday was a little concerning, and the DAX shrugged it off, right? But today, U.S. markets super strong, and this is following through as expected. Okay, cool. So, what do you do now? Well, you're not going to be buying stuff now, like any kind of European denominated assets. Again, you're not going to buy them at highs, but this is great if you're in some. This is a great time to, again, lock in profits. This is also a great time to get rid of stocks that have not been performing that well. Maybe you have some stocks that are not really doing that great. They're still in the red, but you've made some money back. Hey, great time to maybe reduce the risk on those, because when this market turns, I mean, at some point it will turn and it'll have a more significant pullback. Those stocks will probably suffer more than the strong ones, right? So it's a good time to unload on the ones that haven't been doing that great. That makes sense. So, as far as the DAX CFD, there's nothing to do here. We just, if this thing gives us an inside bar or something, perhaps we can call that as a swing trade long, but there's nothing to do here right now. All right, so that's that. Guys, have any questions, again, let me know. Now, let's go over oil. Oil has been acting interesting. Now, and this is what gets a lot of people into trouble. All right, let's pull up oil over here. So look at oil. This is the oil CFD. Now, again, we've had a lot of conversations about USO and OOO. We talked about it on the podcast, and we talked about why it's a bad reason to really get involved in those. Now, the CFD is probably the better instrument to get into if you're going to get into oil. There's no interest on it and all that kind of stuff, right? Interest meaning they don't charge you to hold the position like some people do, at least with the broker we use. So here's the thing. People see this. They see the double bottom. You may have people calling oil long right now, and it's not a bad idea overall. Why? We've been looking for longs on oil since the $20 break. We've been looking for longs there. We were obviously looking early, right? But we didn't actually take any longs. The trade ideas that we sent out never triggered. So then, it broke that support, very bearish. The broader structure here is bearish. That's the problem. We have a lower high at 28. We have this lower high here at 14, whatever that is, right? 14 and a half, 14 and a quarter. And this, right, this little bullish candle we got right here, it's not enough. That's my point. It's not enough. So when some people say, but you're going to miss the bottom. It doesn't matter, because I'd rather miss the bottom, miss some points because, hey, they're not mine anyway, and wait for stability. Right? Michael, that urban chart, when I put that out, that is the perfect example of a stock or an instrument that's stabilizing. We didn't get the bottom of it, but we didn't have to get the bottom. I'd rather get in when probability is more favorable. So oil is not giving us that yet. And at some point it will, and probably some point soon. So what we need is we need a push. We need to break this 14 and a quarter, or whatever that level is right there. We need to clear that. Actually, it's around 15, okay? We need to clear 15, then pull back, all right? Then give us a nice little higher low, and then we have something to work with, because at least there's some stability. We still have a lot of structural situations we need to get through, but the potential is still good on the bigger picture. Okay, so started out strong after the first, now seems to be, okay, you know what? Yeah, you know what? I have to say something. That's good that you bring that one up, Michael. Okay, good. I'll get into those. Here's the thing with that, Michael. Supposedly, now I don't know how true this is, but supposedly Branson is looking to sell. He's looking to get out and take his shares or whatever. He's looking to get out of the company, which is not a good sign for that stock. So if that's true, maybe you want to research that further, because I don't know of exactly how true that is. But if Branson gets out of that, if he finds a buyer and he gets out, that stock is going to have nothing behind it. So I meant to tell that to Andrew too. So just look into that. And again, if that's true, and that may explain why it's not doing that great right now. Okay. All right. So cool. And Bella, so MPC, we're gonna take a look at that. All right, since we're on oil, we might as well look at it now. MPC. All right, so yeah. Now, Andrew's been talking about this. This is Marathon Petroleum. This is one of his favorite. He's been talking about this thing forever. But here's the thing with Marathon Petroleum. You know, much better choice than USO, right? We've been talking about that. And obviously it's benefiting today. You can't do anything with this now. You know, we've had guys like Alice. I mean, I know they've been buying this thing since the lows. They've been buying this thing. So now this is a place to basically take profits off the table. You don't buy this. You don't buy a vertical candle like this. It's strong now. Great, beautiful. We have, you know, we're going to have some resistances along the way, right? The next one, you're probably going to see some inflection around this level here, which is around that 40 level. And then you're going to see some up here, if it can make it that high, around that 52 level. Okay. Yeah, you know what? There's nothing wrong. Whenever you see these vertical moves, Bella, and that's a great question. Whenever you see these, it doesn't hurt to trim. It doesn't hurt. You know, it doesn't hurt to reduce your risk. Now, look, so there's two ways you can go about this. You could say, look, it's a super strong close. Let the winner run and wait until you see something bearish, like maybe a bearish candle. And then, you know, if you're, you know, let's say tomorrow or the next day, you're watching this thing and it's 3:30 or you know, 3:45 in the afternoon, US time, and it's about to close with some bearishness, hey, you know, lock in some then. But why? There's really no reason to sell this thing technically. It's just when I see vertical lines like that, it's, hey, the retailers are out, the shorts are covering. It's always nice to reduce some risk. But that you have to make that choice yourself. I mean, so you can choose to be more aggressive and say, listen, when I see something bearish show up, then I'll lighten up. Or you could be more conservative and say, hey, we're on a high. I'll reduce my risk on the high because it's a good habit to be in. So that's up to you, that part, okay? So you choose one of those, but it's clear. And when oil turns, you know, remember, oil has a lot of potential. So when oil turns, this thing will probably benefit as well. So just something to keep in mind, all right? Michael, Branson is selling. He's more oh, okay. Is that what he's selling? I thought he was looking for, so again, I heard that information. I don't know how accurate it was. But maybe it has something to do with that. Okay, I don't know. So let me do this. Let me run through. Was I going to go through the euro? Let me see. I wanted to talk about the euro real quick. Let me see if I have. Well, all right. Let me see with my time here. Where am I? Oh wow, yeah. All right. So let me do this. I got these two stocks, or I'll throw SPC in there right now, really quick. All right. But there's two stocks I want to cover. Yeah, so this is relative weakness. I mean, that's what that is. With the stock market so strong, this thing should really be moving. So, like I said, Michael, it may have something to do with that, but technically, I don't like the behavior either way. Not crazy about that. So, if it's not, you know, it doesn't hurt to maybe take a little off the table, but it also doesn't hurt to stay in some because you do have higher lows, and it could be something that's just holding it back. There's no guarantee that this thing is going to follow the market exactly. And then some piece of news may come out that may give it that breakout. So that's how I would manage something like that, because you can't always go by the NASDAQ and the S&P. A stock like this is not going to be as sensitive to those, okay? Because it's not a market stock. It's not, you know, it kind of runs kind of like Tesla, you know, runs on different reasons. So just something to keep in mind there. All right, so now I want to get into INMD. All right, does that answer your question, Michael? I want to talk about INMD. And then I want to talk about, where's INMD? I can't even see. Here we go. INMD, and then I want to talk about the other one, TWLO. So look at INMD. Check this out. So just like Urban was looking, this thing is trying to break out, right? And this is good. This is what it should be doing during a strong market. Now, it would have been nice if this thing was above 28. 26.15 is the resistance. So this we do have these higher lows in this thing. If this thing breaks out, then you know you have there's some room here. The next resistance is like 34. So it's a relatively inexpensive stock. Your risk, now I don't have a specific trade. I know we've been dealing with INMD. I don't have the specific information for like a new swing trade type of idea right now. I haven't calculated that, but just showing you this chart. you're looking at your risk at around $21. Or maybe just to be safe, you put it at like 1950. So you give it the whole number, you give it all that stuff, 1950, and you know we're fooling around here at 25.35. So you're looking at $5 or $6 of risk. If this thing can break out, you know, in the face of a strong market, maybe not today, but you know it's certainly in a nice position to break out. We're just going to need some help from the market and some follow through. You know, again, INMD moves on you know its own stuff too, a lot of news and stuff like that. But this is a nice configuration, and we clear that. This thing closes above that 2650, right around there. If we can close above that, maybe tomorrow, maybe the next day, this thing's got some room to run, right? So I think the reward risk is still worthwhile on something like this. So keep that in mind, okay? Keep this on your radar if you don't want to buy this breakout now. But that's what you're looking at in terms of reward risk. I had to sell my stocks near the lows. Okay. How do professional traders deal with? Good question. That's a great question, Scott. Okay, so let me do this. Let me run through TWLO real quick, and then I'm going to answer that question. Okay, TWLO. Now check this out. So just like INMD, right? The reason why I'm picking these stocks is because of their situations. This is a nice strong candle. We have a nice higher low established. Now this is a little more expensive, obviously, than some of those other stocks. But look at this, right? This thing breaks out. You got some room here. You're looking at like 130, around there, 130 resistance. This thing's fooling around at 105 right now, right? No, I'm sorry, around that 110 area. That's where it's fooling around. So this thing closes strong like this. This is a nice breakout candidate as well. Like people may know, I'm not a big fan of breakout trades, but so why do I keep talking about them right now? Because we're in that type of environment. Where I really don't like breakouts, and where I really have, like, you know, we have our conversations on the podcast about this with Henry and Andrew, because they take any breakout. I don't take any breakout. I like breakouts like this that are coming off of higher lows, off of previous higher lows, something that's in strong, you know, bullish momentum. These guys like to buy breakouts up here. They're like, oh, well, you know, the yearly high was up here at 150, and I'm going to buy it at 151. That's where I have a problem. Okay, because why buy up there when you could be buying here? So that's the thing with that. Now, again, these stocks, what's the risk on this? And that's the key thing, because I could sit here and talk about potential all day, and it sounds nice, but the stock may never get there if the market chooses not to cooperate at some point, and there could be some surprise news out of nowhere that changes everything, and then you have to adjust, you have to take your losses and all that. But what is the risk on TWLO? So you're looking at around the $100 level. So right off the bat, you have to anticipate, or you have to be prepared to lose 10 points if you're wrong, if this thing doesn't follow through. So that's really what gives you the confidence to take these things, okay? Okay, Florin, good question. I'll run through gold, and then I'm gonna answer Scott's question, and I'm gonna wrap it up. You guys are gonna keep me here all day. I guess you guys like me talking so much. You guys have to tell Andrew that you like to hear me talk a lot. All right, so again, I just want this to be clear. I haven't sent out anything specific on TWLO, but this is not a bad candidate for a breakout. I'll see if I could put something together for tomorrow, because look, the market's about to close, and there may be some opportunity. This thing may even pull back a little bit and give a better opportunity, you know, a little bit of a better price than we have right now. But put this on your radar for potential breakout, or even follow it on paper. If this is a stock that's out of your range, you can't buy it, it's too expensive, paper trade it, you know, so you can start to understand what bullish configurations look like, and what'll give you the confidence to be like, oh yeah, I'll take that, no problem. You know, as opposed to up here, you know, this is where you should be like, this is where all the retailers are jumping in, and I should probably be reducing my risk, not buying up here. Does that make sense to you guys? Yeah, sure. No, and that's cool, Michael. That's why, you know, so my next one will be Friday. Okay, so all right, so that's that. Let me run through gold real quick, XAU, because I know that's a big one, and I know it's been kind of hesitant right now. All right, it's been acting a little hesitant. Again, strange reaction in the face of the FOMC. Like I said, I don't know the outcome yet. I haven't gone over that information because it's really not that important to me intraday. Now, okay, gold. Well, look, this tells me right here, again, I don't know the outcome. This tells me that the outcome was dollar bearish, because that's a bullish pin bar, okay? So yes, it's a bullish pin bar in a typically risky location because it's at a high like this, but this thing is consolidating. You have two bullish pin bars coming from a higher low over here. And some people could say, yeah, but what about this resistance? This is a fake out area. This entire zone up here is a potential fake out zone for bulls. You know, you buy this thing and then you get caught. But the environment is very supportive. What has gold going for right now is the supportive fundamentals, right? We have a weak dollar situation. The U.S. government is not going to raise interest rates anytime soon. Clearly, they can't. They just keep printing money in all their creative ways. So as long as they keep printing money in their creative ways and creating more loans and just making more and more money available to everyone, gold has no choice, right? It's a deflationary asset. It has no choice but to keep getting pushed higher. So this is a bullish sign. You know, if you're long gold, there's nothing to do here, right? This is a risky area to be buying a new position on gold, but the next step for this thing would be the breakout over here. 1736, you know, basically you clear 1750, this thing's on its way. All right, so, and I'm looking for 1800 next, 1850, something like that. Think here, put it, maybe this will put it into more perspective. And Scott, I haven't forgotten about you. I'm going to answer your question. One thing to put into perspective here, just imagine being short, okay? Like back here, there was a sell signal and it took out the low. So imagine being short. What did I say in yesterday's video? I said, man, if I was short, I'd expect to see follow through, okay? The next candle should be bearish and it should be closing bearish, like, you know, on the low. The next candle did not close on the low. It gave us a pin bar. I would not be happy about this if I was short. I'd be like, man, this thing isn't weak and I'm short, right? Now we got this candle. So this is just strength. All right, so I don't know if that answers your question, but I would not, this is not an area to put on more gold. This is an area to just let it run and, you know, look for that breakout. If it fails and it turns around, beautiful, Florin. If this thing turns, all right, and you start taking out supports, that's when you really should be more concerned. Like you take out, you know, this 1680 area, this low, look at the higher lows. You take out this one here, around 1660, you start closing below those. Those are bearish signs. Gold should not be doing that if it's strong. All right. I mean, this is a minor support. So this one at 1680, it could fool around a bit if it wants, but as long as it stays within this consolidation range, it's setting up to break out. Okay, great. All right. So that's that. Now let me address, you know, Scott asked a very interesting question and a lot of people go through this. So I want to address this and then I'm going to wrap it up. Wow, this is going to be a half-hour session. So again, Scott's question, I had to sell my long-term crypto and stocks near the lows, cryptocurrency stocks near the lows to financial disclosure. Okay, how do professional traders deal with the feeling of being shaken out? This Scott, is a very, very common thing. It occurs, like, for one, get used to that feeling because you're going to be dealing with it a lot, especially on smaller time frames. You know, you're going to deal with that often. It's normal. And it's something you just have to get used to. But how do you deal with it? You just say, listen, you have to learn something from that. You have to go back and say, well, why did I get shaken out? Now, the good thing about what you're saying is you were shaken out for other reasons other than market reasons. So you weren't stimulated by some other reason. Like you didn't read a blog somewhere and said, get out of everything. And then you got out and you're like, oh, you know, why did I react to that? You were forced out for different reasons. Right, so for financial issues. So that's something you don't have control of, right? Maybe perhaps your positions were a little too big. Maybe you could have had smaller positions. I mean, so you have to go back and say, well, what could I have done differently that financial situation would not have forced me out? And then in the future, that can at least help you prepare you to manage risk better. That's typically, a lot of times, the reason why people are forced out of positions or shaken out is because they're too big. Right, they have too much margin on, and you know then the broker changes the margin requirements on you. Next thing you know, they close your position at the bottom, and you're like, what just happened? And then the whole market turns around, and you watch it run up, you know, without you, and everyone else is making money, and you're sitting on a loss. Right, so these things happen all the time. Figure out what maybe on your personal side, what you could have done going into that situation. And perhaps it may have something to do, like I said, with sizing, which we go over a lot. That's why we always tell our members, you know, we give them some sort of ideas on sizing because that's a really key thing. a lot of people go in too big because the leverage is available and they want to make a lot of money, and that's understandable. But that sizing at the same time can cause a lot of problems, especially if you're wrong. So learn to develop your risk management. Focus more on risk management. Don't focus on the feeling of missing out or being shaken out, because it's very negative and it's only going to be discouraging in the future. So you have to take it as an educational lesson. I don't know how long you've been at this. Maybe you've been at this a couple of years, I'm guessing, since you had a portfolio with Bitcoins and alts and all that stuff. But you have to take it as an educational lesson, and you have to put rules in place or something in place that can help prevent that type of situation again. Okay? Although now remember, this is also an unusual situation. This is not like a frequent thing. That's also good, because we shouldn't be dealing with these unusual situations all the time, right? But you do want to be prepared, and always be prepared for situations where the risk can just come out of nowhere. Something unexpected can come out of nowhere, and how is it going to affect your positions? That's why position management is so key. I know that was a very long answer, and I'm over 30 minutes here. Does that answer your question? Great question, by the way. All right, you guys. So, and you know what, Bella, I didn't get to go over, you wanted to go over Melly. I mean, I should have went over it earlier. Look, if you're still there, I'll pull the chart up real quick. And you asked about this yesterday, and I haven't had a chance to go over it. But here's the thing. I mean, higher low right here, 558, higher low. I mean, I'm looking for the higher high. Just looking at the chart right off the bat. Okay, 627, that's your breakout. So if you're in this, nothing to do here, but let this thing do its thing. If you take out this higher low at 555 or 550, if you close below that, that's a time to be concerned. Until then, you have to let this thing do its thing. Okay, so it was over saving into stocks, 2 years at it. Okay, and 2 years is, some people may think 2 years is a long time, but it's actually a relatively short period of time. So you still have some lessons to learn, and it was over. Yeah. So again, so everyone's personal situation is going to be different. Okay. Okay. So, so again, for the future, just prepare yourself and always have a plan in place of like what you would do in that type of situation. Again, Apple. All right, Bella, sure. I mean, okay. Why not? Did I put the symbol in there wrong? AAPL, right? Isn't that Apple? What's the problem here? Apple. Yeah. Oh, AAPL, sorry. Okay. Yeah, I don't really deal with Apple much. So, I mean, look, here's the thing with Apple. Apple is going to follow the NASDAQ, okay? So this is one of the NASDAQ leaders, by the way. It helps to push the NASDAQ along, with Amazon and Facebook and Google. So Apple has this breakout situation occurring. Again, similar situation to Melly, higher low, around 268, right? It's going for the higher high. Great, and we just closed. We closed into this nice close. Here's the only thing that I have with Apple. It's going into a vulnerable area, and if it turns and pulls back dramatically, it'll take the market with it probably, because Apple's a big one. And Apple should be, I would expect Apple to be up here in this situation with the NASDAQ about to break out and push some nice highs. Why isn't Apple up here? That's my concern. Why didn't Apple recover as quickly? Maybe because of its situation and with China and all that other stuff. That could be why maybe people aren't as enthusiastic about this. But technically, without all that opinionated stuff aside, you put that aside, I mean, Apple's in a strong position. No problem, Scott. That's what I'm here for. And that's a great question. I appreciate those questions. So Apple, again, good position, right? In a position to break out, just like those other stocks I showed, like TWLO, very similar type of situation. And again, as long as you have this higher low in place, that's the key level right there. 266, so you figure like 265 area. Apple closes below that. That's when it becomes a concern. And there'll be, I'm sure there's another key level around here somewhere. I have to do the analysis on this. I haven't, done my formal analysis on it. But as far as resistance zones, your next resistance on Apple is going to be up in here, and that's around 305. So it's got some room to run, and the NASDAQ is poised to run. Those two need to run together because they pretty much affect each other. Okay, Apple is the NASDAQ and the NASDAQ is Apple, right? So just keep that in mind. Not a bad stock, not a bad stock to be long, but you know, if you're going to buy this breakout, just keep in mind, this is where you size smaller. If you're going to do something like this, you don't buy it like, oh, I'm going to buy this thing and it's going to go to 305. I'm going to buy 1,000 shares. You don't do that. You buy, so let's say your normal size, let's just say your normal size is 100 shares, okay? So you cut that by 30% and say, okay, I'm going to buy 35 shares because my normal size is 100 shares. So if it pulls back, I only take 1/3 the pain instead of, oh man, this thing pulled back, 50 points on me and, I have 100 shares and that's a lot of money. Now you only take 1/3 the pain and you become a strong hand instead of a weak hand. And then you can average into that somewhat because look, Apple's definitely not a garbage company, as we know. And as the market recovers, Apple's only in a position to recover here at this point. So like I said, keep an eye on that 266 level. That's the level of concern. Otherwise, even if it pulls back and fools around, which it can do, if the market does that, then it may give you a better buying opportunity as well. All right, if you're gonna sort of average into that. All right, everyone, great. So let's see, how long have I been here for? 36 minutes. Man, you guys, I guess you guys like to hear me talk. I'm getting tired of hearing myself talk. All right, anyway. All right, you guys, so thank you for joining me today. I'm glad I was able to address everyone's questions. Thank you for participating. This is great. I'm glad to have all this participation. I'm going to do the next one on Friday. All right, so stay tuned for that. Otherwise, if you have any other questions, please put them in the chat room, and I'll talk to you guys then. All right, have a great day, everyone. Take care. Bye.